We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Stephen Tremblay, or @CaseForSilver on Twitter. How are you today, Stephen?
Very good. Yourself, Tom?
Excellent. Great to have you. So I was thinking we could kind of start here because you're one of the silver gurus on Twitter. Let's talk a little bit about the supply demand picture for silver and give us your perspective on the combination of Biden's $1.9 trillion stimulus plan combined with this big push towards renewable energy.
Yeah, for sure, Tom. I mean, silver has been used for thousands of years as money, right? It's a monetary metal. We know this. In 14 different languages, silver is actually used. The word silver is the same as the word money. So that won't go away. So if we look at the industrial portion of silver's demand, I think it's only going to go higher and higher in time, right? I mean, it's being used. The modern world cannot exist without silver. We have it in all the electronics. We have it in cars and engines. We have it in solar panels. We use it immensely in the health industry. So especially now with everything going on with the COVID crisis and that, I think silver will be used even more. They'll find new ways to use it. For me, it's a miracle metal. I mean, it's not just about a metal that you hold it and you think it's going to be money one day. We're going to go back to a gold and silver standard. I think it has a lot of uses, and for that, it's really exciting. You don't have to see a dark world to invest in silver.
Mm-hmm. Yeah. So what are your thoughts on, obviously you just highlighted a lot of the industrial demand for silver, but do you think that people are going to start seeing it as a monetary metal again, once it really starts to accelerate here?
Yeah, I think people are starting to see it a bit. I think the more people come on and I'm kind of a new guy in the game and trying to share my knowledge of, I've been interested in it since 2011. So doing these interviews, trying to spread the word, I think is important. But I had a call today about a load project for kind of a currency that's backed by silver, something interesting that I'm looking at myself for my investments. So yeah, I think there's some efforts out there to do so, and I think you got cryptocurrencies that are taking that, some of it as money, right? It is a system for money. It has its purposes. Mm-hmm. I think there could be a blend that could come together there that could be very interesting as well. So I think that might open some doors as well for silver. I don't see it as a negative at all. So I know I touched about something you didn't ask me about, but I think cryptocurrencies and silver and gold, I think, they can all work together, I think, in a very powerful way.
Absolutely. So why don't you highlight for us some of the, let's say, traditional numbers that we're used to seeing, let's say for production ratios and where really the price of, let's say, gold to silver is right now.
Yeah, for sure. I mean, the mining of the metals for silver compared to gold, you're looking at when you mine 1 ounce of gold, you're getting about 9 ounces of silver as well. So you're looking at a ratio of about 1 to 9. In the mine's crust, in the Earth's crust, the full crust of the Earth, you're looking at about 1 to 17.5, 1 to 18. So that's the natural ratios that exist, right? And then we look at past monetary systems. You're looking at 1 to 15. Approximately that's been used in the past, 1 to 30. So these are the ratios that I'm looking at for targets between gold and silver. My ultimate target, I think, would be around 1 to 15. I think we might overshoot that. And currently we're at 1 to 73 or something like that. So I think, quite a big opportunity. I think silver is tremendously undervalued compared to gold.
So, Stephen, how do you find that this is instructive for you to look at the metals, let's say, versus each other instead of looking at it at the price of metals versus a fiat currency?
Yeah, good question, Tom. And it's not just looking at the metals against each other. I think it's looking at metals against everything else as well. Any kind of assets you can measure. We know that fiat currencies are dying around the world, right? And no fiat currency ever existed forever. So it will come to an end. Whatever system comes to replace it, we shall see. It's not my place to say that's going to be. I'm just trying to get myself, my family, and my wealth prepared for whatever happens. I think that's critical. So instead of measuring an asset against, for myself, it's the Canadian currency, or against the US currency or any other currency, measuring it against another asset, I feel gives you a much clearer picture of when to get in and when to get out when it comes to investments.
So let's talk a little bit about the seasonality of metals prices. Why is this an important aspect to the price action for you to keep in mind?
Yeah, well, seasonality is pretty accurate. I mean, if you go to equityclock.com, many of your viewers can go check that out. You can see all the different assets and their seasonality, and it's not a 100%. You don't just bet on the dollar, on the silver going up from this date to this date, but you put it in context with the technical analysis that you have, the fundamentals, the stimulus, a new presidency, whatever else you got with the seasonality. I think it adds to the picture, to your decision. And right now, silver seasonality from January, February, March are some very, very solid months for silver. And if you look at uranium, I showed on my Twitter, I think it was in October and November, I had checked the uranium seasonality, and it actually showed that at the end of the year was a good time for uranium. And sure enough, it proved to be true. But it doesn't mean it happens every year, but you just put it in your formula when investing.
Mm-hmm. So you have a couple interesting charts here that we'll put up in the video. So why don't we start with the palladium to platinum ratio? So tell us a little bit about why certain of these, let's say, sections of the ratio here, you would want to switch from one to the other, and how you think about, let's say, trading in these other metals that aren't necessarily considered by normal gold and silver bugs.
Yeah, for sure. Well, first of all, any asset, I believe that it's a hard asset, something that's real. I call it real. Something that doesn't have a big derivative attached to it. Any real assets, I think, will do very well in the world that we're entering. Same goes with skill, knowledge. Everything that's real, I think, is important. Mm-hmm. When it comes to palladium and platinum, they've had these switches. And I'll give the credit where it's due. David McElvaney, who I listen to every week, is a real proponent of these ratios. So if we look at platinum to the palladium to platinum ratio from 1992, you're looking at about a 4-to-1. Right. And then now we're below, and you see these waves like in 2000, it went down under 1-to-1. Then we went back up to 4-to-1. Then we went back down underneath 1-to-1. And right now we're even lower than that. So I think that offers a big opportunity to invest in platinum, and in however many years you switch that over to palladium, and then you compound those ounces. And I think that's a nice strategy, and teach your kids to do the same, and then you can kind of create generational wealth with that information.
Interesting. So are you actually buying physical platinum at this point to kind of, when you're using this to kind of inform your decision here?
I use the ETF PPLT. It's fully backed by platinum. So this is the instrument that I use for buying the metal right now.
Perfect. So let's move on to the Dow to silver ratio and highlight what's important to you here that you're seeing.
Yeah, for sure. Dow to silver ratio, you can see here how we're up at the top of the charts right now. So if you accumulate silver now, and this is just kind of my plan in general, but you can sell when the ratio drops, and you can get a lot more shares for the silver that you own. So watching this ratio for me will allow me to go to switch over a percentage of my holdings into the Dow or the S&P or any other probably high dividend stocks, so I can get an income from it during retirement years, hopefully. So that's kind of one of my strategies. Perfect.
And we've also got Dow to gold. So are these basically showing us the same thing?
Yeah, pretty much. I mean, I think they're gonna change a bit if the gold to silver ratio changes. Mm-hmm. One will move faster than the other, but for sure, I think we know that the gold and silver move together, but you can also look at the gold to silver ratio and then time it with this. So the last chart, as you'll see, the gold to silver ratio, we're at about 75. So if we drop to there's no reason to get out of metals completely ever if you look at the ratio. So that's one thing I'm always going to have some metals in my portfolio. I'm very heavily into precious metals right now in my investment. But once this gold to silver ratio drops around, say, 1 to 15, I'll transfer most of my silver into gold and just kind of see if I can ride the wave back up again, or for my kids to do so.
So what's your thinking behind that number of 1 to 15, as you're saying? Is that the point where you think you have the most leverage or let's say upside in gold versus silver?
Well, I think it's a natural ratio. It's kind of where I base my thesis on. So it could stay there for a while, depending on, again, what happens and how the charts play out and what policies the governments have. Mm-hmm. But I believe a 1 to 15, 1 to 30 ratio should be more, can I say, standard in the years to come, would make a lot more sense.
Mm-hmm. I think another interesting chart here that I found that you had posted was the silver to gold mine production ratio. So tell us a bit more about that and what that's kind of really showing us and why it's so instructive.
Well, it shows you what's coming out of the ground, right? This is the supply. This is where all the metals come from, are from mining companies that mine this stuff out of the ground. So what's the ratio coming out? What's the supply? So you look at the whole supply side. Doesn't come from anywhere else. They dig it up. Yes, there's recycling, there's stuff like that. But so you look at the ratio of 1 to 9, 1 to 8. I mean, that's the supply ratio. So why is the price trading at 1 to 70 something an ounce and hit 1 to 120, I think, in August? So crazy stuff. So I think that offers opportunity when you just look at the plain facts. I mean, you don't have to get fancy with this stuff.
So in your opinion, Stephen, is there, are these numbers just going to get worse and worse really for silver? We know that there's a real lack of primary silver mines in the world. So do you see this getting any better?
I think it's going to take a long time to catch up. But I think price discovery will fix a lot of it if it does happen. Mm-hmm. But the thing with silver, its price is inelastic, as they call it. So if the price jumps up quite a bit, you can't just ramp up supply, as you say, because your supply is inelastic. It's not going to ramp up because it's from byproducts, right? So it's gold mines producing silver. So they're not just going to ramp up productions of gold if the silver price rises, right? And it's the same with the demand. So the demand side of it, silver is used in such small quantities in many devices, many applications. It's thrown away in the dumpsters, right? So one day we'll have mines in the dumpsters try to recover that silver, right? So it'll be a different kind of mining. But I think that's a shame. But it's the fact. So I think, it's...
As you say, the price isn't high enough to really support that recycling and stuff right now.
Not right now, no.
Mm-hmm.
Exactly.
So why are the miners undervalued compared to gold or silver? And what data do you use to kind of instruct your thinking on this?
Well, I look at the ratios once again, right? So I don't measure the miners with their past charts. You can look at I try to focus a lot on the ratio charts. So if you look at GDXJ or GDX compared to gold, when gold was last at 1900, GDX was probably 4 times higher than what it is now when it comes to the mining shares of GDXJ. So if someone wants, my thinking on this is I'm investing in these ETFs. They give me a broad investment in the mining world because it comes with a lot of risk as well. Mm-hmm. And I want to leverage the price action of gold and silver. And if we get that rise that I'm expecting, I will probably transfer over those mining shares back into the actual metal where it's safer and where my capital can sit. So again, it's all about these ratios and making the decisions according to that.
Mm-hmm. So can you tell us a bit more about why you really prefer to use these ETFs? Give us maybe some examples of your favorite ones and why you really prefer them over individual names.
Yeah, well, I got three right now: SILJ, GDX, and GDXJ. So I own all three, pretty much well proportioned. I look at the list of the stocks that they own. They're good stocks. They're solid. The names are the ones that you hear individually. It takes a lot of research to pick individual stocks in the sector. So I have a lot. I'd rather keep that for, I also do trading in the other equities, other stocks that I see potential when it comes to technical analysis. So I'd rather work on that for the charts. So for the long term, and I want to ride the next bull wave, right? So I'm trying to, it's going to be a multi-year investment. So I feel safer there for my capital. And then even if if I don't gain as much, so be it. I'll take 100%. It's fine if I don't get 500. But I also invest a lot. I'm building my portfolio into royalty and streaming companies. I think they offer a great opportunity for the future for sure.
Mm-hmm. So what are some of the pluses that you see to the royalty companies, and why are they attractive to you?
Well, mining companies, they operate with, there's a lot, right? So you got, I work for mining companies. So you got CapEx, right? So you got capital projects that need to be funded. You got drilling that needs to occur. You got equipment. You got fuel. You got to feed the people. You got to the energy you produce. There's a lot of costs, a lot of overhead, a lot of staff. When it comes to royalty companies, the ones that can invest smartly into these companies, well, they get a royalty or a stream from them, and they have a low capex, low expenses, so they're much more profitable. So I think that's a main reason why I like them.
And as we're talking about ETFs, why don't you highlight for us some of the issues that you see with something like GLD or SLV? Well,
the one question I would have is, are they fully backed, right? I mean, I'm not going to answer that question. I haven't audited their vaults, but I look at a spot ETF like PSLV or CEF. CEF owns 80% gold, 20% silver. I own some of that in my long-term investments as well. I trust that a lot more than, and they are audited and you can see the reports. So for me, it makes more sense. I think SLV, GLD, if you're trading, I think that's okay. But again, you're just, I guess, fueling the paper market, which is fine because we can buy the metals a bit cheaper. So that's okay.
Mm-hmm. So what kind of levels are you looking at right now to enter into some of these? As you said, let's take SLJ, for example.
SILJ, I look at it's totally price action. So I'm looking at the charts. I'm looking at support, resistance. I'm adding at these levels. I like where they are. So it's pretty much all technical analysis and where the charts are. I think they're super cheap. I mean, if you can play with buying 5% lower, 5% higher, but for the long term, I think you just kind of accumulate every month with these as long as the ratio stays where it is. Mm-hmm. And that's a great opportunity.
So you're kind of dollar cost averaging in.
Yeah, for sure. Yeah.
So Stephen, how do you think about, let's say, the ratios, or are you very deliberate about what kind of, let's say, percentages you put into building your portfolio? Like, do you put a certain amount into physical metals, another amount into miners? How do you go about thinking about that?
Yeah, well, I hold a majority, and I posted that on Twitter. So I had the pie chart that I shared of my investment. So a large portion, I'd say 70 to 75%, is in the physical metals. This could be ETFs or whatnot, or in vaults, but that's most of my wealth is in the physical, and I have probably a 20% of the rest of my portfolio that I have in these royalty companies, in these ETFs, and in platinum and some uranium a little bit. So.
Perfect. So yeah. As you were just saying, you use technical patterns and technical charts quite a bit, and you have been putting some of those out on your YouTube channel. So can you tell us about some of the technical patterns or indicators that you watch that really help inform your decisions here?
I used to have a lot of stuff on the charts, and I found, and as I researched more, I found that everything's in the price and the volume. So I look at price action. It's pretty much, and I'm patient. So I don't mind missing out an opportunity. If I do, I do. This happened on Metalla Royalty, where I was hoping for a pullback exactly where I thought it would go. It did not, so I didn't pull the trigger, and then it went up quite a bit, right? So sometimes you miss the boat, but you don't chase. So I'd rather buy good pullbacks on strong support. And when seasonality is right, when the charts tell me that we're at a support level, if the 200-day EMA is supporting the price as well, these are all the kind of things. And then I look at the ratios, right? So platinum, I'm loving platinum right now. So I find it's probably the cheapest asset out there compared to everything else. So
interesting. So
yeah.
what are your favorite resources that you found very valuable for learning these technical trading patterns?
Yeah, for sure. I think, I have a few written down here, and I hope you don't mind me looking at my book, but Chart Patterns by Thomas, I hope I don't ruin his name, Thomas Bulkowski. He does a lot of price action stuff, so I think he's one of my big influence. Simple stuff like the candlestick course. So for anyone trying to start technical analysis, by Steve Neeson. Steve Neeson's a recognized guy for candlesticks. Mastering the Trade by John F. Carter. All the James Rickards books, more for macro view of things. Trading in the Zone by Mark Douglas. And then obviously David Morgan's Silver Manifesto and Mike Maloney's great YouTube series as well have been very valuable. I like YouTube as well. So yeah.
Excellent. You recently shared an example on Twitter of kind of following Bill Gates's actions as he's become America's largest farmland owner. So why do you find this so instructive?
Well, like I said, anything real assets. So right now I'm in the process of selling my home in town. So I'm moving to the cottage. I have about 1 acre. It's not a huge land, but I have my little farm. I got, I butcher my own meat. I have my gardens. Now it's, we got 3 feet of snow, so that wouldn't work. But in the summertime, I have my greenhouse, my gardens and everything. So I'm kind of trying to build self-reliance, teaching my kids the same way, firewood, getting our own energy. So I think that's critical, right? So I think investing in yourself, in the knowledge and other skills that's not behind the computer. I think I have an office job as well. So I think that's really important because we don't know how the world is, now we're seeing we're all in confinement and with this COVID, where we're going to next. So I'm not going to predict where we're going next. It's not my job to do so, but just being prepared to face reality when it happens. Mm-hmm. I think it's important to learn these key skills. Yeah,
I think a great way to think about that is that you're never really going to be worse off for learning any of those things or having any of those preparations, right?
No, and it's the joy of doing it too. Like I love doing this stuff, right? It's like having the animals. Now we have baby ducklings that were born and watching them hatch out of the egg and stuff. I mean, if you haven't seen that live in person, it's just, it fills your heart. It's amazing. I mean, it's a beautiful world for sure. And part of that, let's say strategy as well is kind of becoming your own central bank with physical metals, right? Yeah. Gregory Mannarino is one of the guys I watch on YouTube. He's a wild character for sure, but and he's exactly right. We become your own central bank, have your own gold and silver, put yourself on an honest money system, and just live your life.
So do you take any considerations to, let's say, store some of your physical overseas, or how do you go about thinking about, risk of repatriation, anything like that?
Yeah, that's a good question. And maybe I haven't paid enough attention to it, honestly. I don't have anything like overseas. It's mostly in, like we have these fully backed ETFs also in vaults just in Canada, but at the Royal Canadian Mint, places like this where, in Canada, you can actually have your metals in RRSPs, registered retirement savings account, and they store the metal and you pay the fee in that. So I think that's a personal decision. I think that everybody has to take as where you're going to store them, how you're going to protect yourself. But knowing where they are and for them not to be too far, I guess, is important.
Perfect. Stephen, do you have any other kind of concluding thoughts as we wrap up here?
No, I think, as I said, I'm kind of a new guy on the scene and stuff. So if you want to check me out, for sure, Case for Silver on Twitter. I also have my small membership site up now, which I'm enjoying sharing content daily on there. So you can find that at caseforsilver.mn.co. Other than that, Tom, I really appreciate your work and everything that you do as well. It's a lot of fun watching all your videos and all your guests, and I'm honored to be here with you today.
Thanks very much, and it was great to have you. Why don't you tell our listeners a little bit more about what you do on your site there?
Yeah, well, I just break down charts. I kind of, like I said, I'm selling my home, so I'm going to be having a quite a bit of capital to work with. So I'm looking forward to putting that to work, and I'm just sharing with everybody what I'm doing with it. You know, I might screw up, I might do a good thing, whatever. It doesn't matter, right? But being transparent with that, and hoping to help some people see what I do, what mistakes I made, I openly share when I get stop loss of a position. I show my emotions, whatever. I try to be as transparent as possible, just to help people. So hopefully, check it out.
Perfect. Stephen, thanks very much for your time today.
Thank you very much, Tom. Have a great day.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.